Are you ready to decode today's market chaos? We're breaking down the critical candlestick signals from October 10th, 2025, revealing the hidden trends and opportunities you can't afford to miss. This is your essential guide to navigating the volatility. Let's dive into our market snapshot. October 10th unleashed sharp volatility across global markets. In the United States, indices faced a significant downturn, with the Dow Jones Industrial Average falling 1.58%, the Nasdaq Composite plunging 2.98%, and the S&P 500 correcting by 2.24%. The selling pressure was most intense around 2 p.m. Eastern Standard Time, marking the day's lows. In contrast, Indian benchmarks showed resilience, with most sectors advancing. The primary strength was seen in the auto, pharma, bank, FMCG, realty, and consumer durables sectors, which posted gains ranging from 0.5 to 1.7%. However, not all was positive, as the metals, defense, and IT sectors experienced notable declines, highlighting a significant divergence in market performance. Now, let's look at the candlestick structure. The dominant candlestick duration for our analysis today was the daily chart, providing a robust signal for major indices and key sectors. However, for industries known for rapid price movements, we also examined shorter timeframes. For instance, chart industries, stock ticker GTLS, exhibited a bullish Maribozu on its 15-minute chart. This pattern, which is a long green candle with no upper or lower wicks, signifies that buyers controlled the price action from the open to the close of that period, reinforcing a strong intraday buying trend that peaked around 11:45 a.m. Eastern Standard Time. Moving on to the technical interpretation. Intraday charts for the U.S. indices revealed multiple bearish patterns, including bearish engulfing and hanging man formations. A bearish engulfing pattern occurs when a large red candle's body completely covers, or engulfs, the body of the preceding smaller green candle, signaling a powerful shift from buying to selling pressure. The hanging man is a single candlestick pattern with a small body at the top and a long lower wick, which suggests that sellers pushed the price down significantly during the session before buyers managed a weak recovery. The presence of these patterns points to a potential continuation of the downside in the short term. Conversely, India's Nifty index formed a bullish candle with only a minor upper shadow, indicating resilient sentiment and sustained buying interest for broader Indian equities. In specific high-growth stocks, we observed strong bullish patterns like the white Maribozu and bullish engulfing, which historically indicate full session, buyer dominance, and potential for further upside. Let's now analyze our sector and industry highlights. In the U.S. market, metals and technology sectors displayed pronounced bearish candlestick structures across their daily charts. The technology sector, which has a market capitalization of over $2 trillion, was dominated by bearish engulfing patterns, with 22 instances recorded. This indicates intense selling pressure and suggests the sector may be overvalued. Similarly, the global metals sector, valued at over $1 trillion, showed 15 instances of hanging man and bearish engulfing patterns, classifying it as bearish and overvalued. On the other hand, several sectors in India painted a much more optimistic picture. The auto, pharma, banks, and FMCG sectors all showcased bullish daily formations. The auto sector, with a market capitalization of $400 billion, was marked by 5 bullish Maribozu candles, though its valuation is considered slightly overvalued. The Indian pharma sector, valued at $300 billion, was a standout with 12 instances of bullish harami and bullish engulfing candles. A bullish harami is a 2-candle pattern where a small green candle is contained within the body of the previous large red candle, often signaling a potential trend reversal from bearish to bullish. These patterns, combined with an undervalued status, point to strong positive momentum. The banks sector in India, with a market capitalization of $1 trillion, also showed strength with 10 bullish engulfing patterns and is considered to be at fair value. Finally, the consumer durables sector, valued at $100 billion, displayed 8 bullish harami patterns, reinforcing its undervalued and bullish outlook. Delving deeper, the daily chart for the Indian pharma sector revealed multiple bullish harami and engulfing candles, which are clear indicators of buyer conviction and a potential upward trend. In stark contrast, the U.S. technology sector was dominated by hanging man and bearish engulfing formations. These patterns serve as clear warning signs of ongoing negative technical momentum and potential for further price declines in the near future. The high count of bearish candles in such a heavily weighted sector warrants significant caution for investors. Regarding sentiment and outlook, global market sentiment has tilted towards caution. The macroeconomic volatility, combined with renewed tariff threats, is fueling a short-term bearish bias, particularly impacting the technology and metals sectors, which are sensitive to global trade dynamics. The prevalence of bearish candlestick formations in these areas supports this cautious view. However, in regions where bullish patterns are dominant, specifically the auto, pharma, and FMCG sectors in India, sentiment remains constructive. The technical signals suggest that value buying is currently outrunning the broader selling pressure, creating pockets of opportunity for discerning investors who are focused on underlying strength and attractive valuations. To provide a clear overview, here is a summary table. For the metals sector, the leading pattern was the hanging man, with a bearish count of 12 against only 3 bullish candles on the daily chart, and its status is overvalued. For the pharma sector, the bullish harami was the leading pattern, with a bullish count of 10 versus just 2 bearish candles, and it is currently undervalued. The technology sector was led by the bearish engulfing pattern, with a staggering 18 bearish candles compared to 4 bullish ones, and it remains overvalued. The auto sector's leading pattern was the bullish engulfing. It's a bullish count of 8 versus 3 bearish candles, but it is considered slightly overvalued. Lastly, the consumer durables sector was led by the bullish harami pattern, the bullish count of 7 against 1 bearish candle, and it is undervalued. In conclusion, today's market analysis underscores the profound influence of macroeconomic forces, which are driving significant sector divergence. The daily charts reveal a clear split. The metals and technology sectors are skewing bearish, weighed down by high valuations and negative technical signals. In contrast, the pharma and consumer durables sectors in India appear undervalued and are strongly supported by bullish candlestick formations. The dominant use of the daily duration for all major sector analyses ensures robust signal integrity, which is crucial for both swing traders and institutional investors adjusting their positions. As we move into the upcoming sessions, it is vital to monitor the daily candle formation counts by sector. This will provide critical cues for trend continuation or signal potential reversals. Thank you so much for watching. I hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, subscribe, and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.